Hello traders, it's 8:01 a.m. Chicago time on Tuesday, the 8th of October, 2019. This is episode number 1612. I want to remind you that derivatives trading is not suitable for all investors and past performance is not necessarily indicative of future results. This morning, the way things are setting up here, it seems like we are in a market that is, whoa, in a market that is in a risk-off sentiment. We're gapping down in the S&Ps. We're gapping below yesterday's range and attacking of the range low of Friday, the rally day. We're taking a lot of that back. The laggard today is crude oil trading at 51.98 on a November contract, down 78 cents or 1.46%. The Russell is off almost 1%, down 14.2 points. DAX is off. And the leader today is gold, up $5.30, trading at 1509.90 and up 0.37. The yen, the bonds are up 18, and the 10-year is up 10 full ticks. Bund is up 25 ticks. So some news came out overnight, which is potentially driving some of this. It involves the Chinese spokesman, foreign ministry spokesman, opposing the U.S. blacklisting of technology companies and urging the U.S. to withdraw such a decision and that retaliatory measures were likely. And so this is, again, the theme is back to trade wars, and China is issuing a warning here. Risk appetite loses some luster after China urged U.S. to withdraw its decision. Doubts rising of any potential Brexit deal ahead of next week's EU leaders summit. No deal outcome scenario rising in the UK. So this is what we've got. The market is taking that and running with it, and so it is pulling back down. The news came out. Let's see. Looks like the news came out somewhere around 29, 21 in the S&P, somewhere around there. I'll check on that. Anyway, this is where we stand. In terms of what's on deck for today on the calendar, we did get PPI month on month for September, came out at negative 0.3%, expected plus 0.1%. We do have one more number, the IBD tip. This is considered a low tier number, but we have Fed's Evans speaking at 1:35, and we have Fed's Chair Powell speaking at 2:30 p.m. today. We do get API crude oil inventories at 4:30 p.m. today Eastern, and then Fed's Kashkari at 5. That's what's on deck. Not much on the calendar in terms of what is scheduled. Let's go to our review session or review segment. This was, why is this kind of fuzzy? This was the expectation yesterday. The main expectation was a continuation of the trend. You notice that the trend on Friday ended with the market closing at the high, and so the expectation is that high would be taken out. So the primary scenario is to push up above the prior high. Expected it to get tangled at 58.75, as you can see here, 58.75. If you don't see this clearly, you might want to go down to this little thing, the settings cog, and switch your quality to 1080p and then enlarge the window, maximize this window. You can maximize the window by pressing this full screen button down here. So the expectation was we would likely push to 58.75 and counter some sellers. Remember yesterday I talked a little bit about the idea that it is likely that buyers would face some hesitancy, some quite a bit of resistance pushing up, and that ultimately this pullback higher is likely to roll over. The expectation is that buyers would struggle to maintain higher prices under current conditions. What do we do? We get to 55 yesterday. We take out the prior high to 55, and then we ultimately get to 59.50 on news, and then we roll over. Remember, the the primary scenario expected 58.75. We got to 59.50, 3 ticks higher before we rolled over, and the expected test would be at 24.75, which the market was heading to. It looked like if it had a little bit more time, it would have gone neutral on the day. The IB yesterday was not very wide. It was 11 points. And the expectation was for it to ultimately, once it got below the mid IB high VWAP right here. This was a setup that I talked about that I recommended that if you're going to take it lightly. The news came out right afterwards and pushed higher. So those who took it ended up making some money off of it. But ultimately, it failed through the mid VWAP IB high, and the expectation was for it to take out this IB low, which it ran out of time to do. And that left us with the overnight session doing that work for us. But again, we pushed the expected high. This is scenario one, almost on the nose, missed by 3 ticks on the top, and did not get the 25, which would have given us quite a bit of range actually on the day. The overnight session saw a fair amount of action here. The overnight session got a little bit of a bounce. We did continue to push lower on the reopen, took out this low, and he neutral by 2 ticks or something, and then ended up pushing back up to the 50. And then from there, once the European markets opened, it started to kind of flow downwards, and the overall inventory is short. The European session saw quite a bit of action as a result of the news coming out. That news was at 2:31 Central, 3:31 Eastern. Let me look at where that is on the order flow. Here it is. The SOC before the news. Whoa, it seems like that can't be right. I'm seeing it on the order flow at about 3:53 Eastern in the morning. Saw a big sharp move there. 2:30, we saw some selling, but nothing really serious. But the big move occurred at about 3:53 Eastern. So that's right in here. 3:53 Eastern, right in here. Anyway, what we have on the profile in the overnight session, couple of markers, strong volume in the overnight session, expecting that to continue into today's session. It is Tuesday, historically the most volatile day of the week. And we've got quite a bit of range in the overnight session, 29.50 to 29.10, about 40 points. That's quite a bit wider than what we would consider to be normal. It's just above the second standard deviation of range, overnight range. And then we have multi-distribution profile, a multi-distribution profile with the point of control in the lower, I don't want to say quartile, but it is about the lower quartile, 40 points, and the point of control is at 19. So it's right on the edge of the lower quartile, and the market's resting and not able to pull back. Now, the low is, look at this taper here. Can anybody guess if this is a good taper giving us an potential excess low, or if this is a weak low. Anybody want to guess? Guess what? I can't wait for you because it's like a 12 or 15-second delay on YouTube. So I'm not going to sit in silence and wait. This is a bona fide excess low here as we see the taper coming right off. Taper coming right off as prices dug deeper into 29.10. You can see volume drying up. This is the behavior. This is the expected auction behavior of an excess low at the low. So it'd be interesting to see how the market treats this. This doesn't mean that the market may not go down there. Okay, it doesn't mean that we were not uh, likely to break this, but just note that the overnight participants here are seeing this as an excess low at 29.10. It was bought right back up 13 points from the low, and we've been in a box in like a bigger picture zipper here on the 15-minute and holding steady. The market essentially has moved from finding balance down here to finding balance up here to now finding balance down here. That's the sequence of events, and that's the way the market is shaping up. So with value moving lower and yesterday's low, beneath yesterday's point of control and beneath Friday's point of control, the market is back in the MC from August, and that's important to note. So these are the areas to watch out for, are going to be shown here. So here we are. We have moved from the August balance right here from the beginning of August till the beginning of September. We moved into the September balance from September 5th to October 1st. We then dropped on October 2nd, 3rd, 2nd and 3rd. The 4th came up. The 7th poked into the prior balance and we're falling out of balance. This is likely to continue lower and test below us down into the point of control of these last 2 days, down at 88, and we're likely to test this range, this MC range right now. We're trading at 29.20. 28.88 is a bit of a distance below. It's about, what is that, 20, 32 points or something like that. We're likely to continue lower unless news comes out. And with the White House tweeter tweeting his head off over the last week, anything can happen here on the day. So just keep your news feed on. Keep your news feed on. It's not like we can trade the news as it happens, but we can see why the market is moving, whether it's technical or news based, and can then respond accordingly. Again, the overall expectation here is that the market's likely to struggle on the buy side and facilitate trade more easily to the downside as it's shown this over the last week. Now let's take a look at the order flow and how things looked overnight. Um, so here I've scrolled back to the news came out at 2:30, 2:30ish, 2:31. The foreign ministry speaker came out saying they oppose the U.S. blacklisting of company urges U.S. to withdraw. And then the bigger move, however, occurred right here at 2:53 a.m. my time. It seems like the market was drowsy when that first news event happened and we started to sell here. The bigger move occurred right here from 29.41 down to 34. And since then, it's sat sideways, the market recoiling and holding sideways, consolidating. We expect an extension move. There's the extension move, a continuation move. We have a continuation move back here, pull back, another continuation, and then even farther down. And overall, 29.25 has been well offered throughout the session. And now here we are trading at 29.20, 29.50, 29.1950, with some pretty decent liquidity above us in the stock zone that also represents the MC point of control. Pretty noisy area here. Beneath this, we have 29.0875 and then 29.05, which is where I expect that we would be going today. So that's how the order flow looks. If we zoom out, we can see there are other areas, 2900, of course, but overall, I'm looking for the market to recheck 2905 at some point today. It's about 15 points away. It's easily attainable with this current volatility. Let's take a look at what's expected for today, so we can wrap up here. Let me set up the screen. So for today, why is there such a delay? For today, we're looking for primary scenario. We're likely to be out of range. Um, Out of range, and then we are right against Friday's low. We have a small gap beneath us, which the overnight session filled. Remember, we're at the overnight point of control right now, which is relatively sharp on a trend move down. The because of where we are, I expect a short open auction. I'm looking for responsive buying to come in and take this back up into 29, 26.75 and potentially into the 29.30 area before an impulse takes place and brings us down into the overnight low, taking care of our overnight stat. And then overall, I expect us to move to 29, to 29. Where are we? Yeah, I expect us to move into 29.05, which is actually right in here, into 29.05 for a small bounce later in the session. So 2900, 29.05 would be the target below, giving us about 25 points of range or so. The secondary scenario is an open that tests up, drives down, and in a drive, we're likely to push farther, and then we're looking at 28.8975 as a potential target area, and then just beneath there, 28.82 before we do get a bounce into the close. The third scenario is completely responsive. The third scenario is an open auction, test down into the overnight low, impulse up, consolidate, and then grind up the same kind of way we did yesterday and start to move back into the range and back into 29.44, 29.50 would be the key target above, which is also the overnight high, before we hold steady into the close. I'm fairly confident that we're likely to see some responsive buying before the selling takes place. We're likely to test the MC point of control from below before we start selling. I mean, if I was a big seller and I wanted to come in and sell the crap out of this market, I would want to see a rise. The best case scenario for me, if I were a dedicated seller right now, the best case scenario for me would be to see the market rise. I would want the market to rise. I wouldn't want it to sell off from the open. I would want to see the market rise, and I want to see buying failure that I can sell into with a high degree of confidence and can really press the position, put on some pretty good size and then watch the thing roll over and then start peeling off risk as the market drops. That would be the ideal situation, and that would be scenario one. So this is what I'm looking for in this type of action. Anything can happen here. We're in an open auction. We're beneath yesterday's range. We're on the edge of Friday's range. We're on top of Thursday's range. We're in the lower MC. We're around the MC point of control. So if I sat here and told you, hey, scenario one is going to be the one, I'm a liar and you shouldn't listen to me. There's no way to tell. Prices may be seen as too cheap, and we may see ourselves back in a range in that scenario three. These scenarios all have almost equal probabilities, in my opinion, just a kind of a rule of thumb. Um, I see them all kind of having the same probability of playing out. That's not to discount an open drive down, which is scenario four. Okay. This is where we stand. It is we're 8 to 7 or so minutes away from the open. Good luck today. Mind your risk. Another day to potentially just sit out and wait for the market to set up for the first 15, 20 minutes. I've been doing that a lot lately. I hardly ever see the opening location and opening type are really important to me, but I hardly ever see an opportunity to hop in within the first few minutes anymore. The market is not as clear cut as it normally is. It's got a lot of noise in it. And so that's where we stand. Good luck today, and I'll catch you tomorrow morning. Take care. By the way, Convergent members, don't forget about the trade talk today. We'll cover the what the market has done up to that point, and we'll address any of your questions. Your invitations by email, and it's on the chat community chat notice board. Good luck.